Batavia has been operating for 16 years. How has the Indonesian fund management sector performed in this period?
Fund management industry started back in 1996. It practically started from nothing, and it has grown to the current asset under management of $18 billion. It has gone through a few ups and downs. The first downturn was back in 1998 when we experienced the Asian crisis, and the market started picking up and the industry started picking up again and had a good run for 7 years until 2005 when we had the Indonesian bond crisis. The industry got affected a little bit on that year because the majority of the assets under the asset management sector at that time was still very much dependent on bond. In 2006, the market started picking up again, the industry started picking up again, had a good 3-year run until 2008 when we experienced the global crisis. 2009, things got better again, and since then, the industry has been growing quite steadily.
What do you perceive as your greatest achievements over the last 12 months?
There are a few of them. One will be the growth of our asset under management. In 2011, we experienced 18% AUM growth versus 14% average for the industry growth. With our asset under management in December 2011 at $1.1 billion, we become the largest local asset management company, private asset management company in Indonesia. Second thing will be productivity. We become the most productive fund manager in the country in 2011 by launching the highest number of funds for our institutional clients as well as our distributors. We also receive a few local awards. A couple of them was actually for our flagship equity fund named Batavia Dana Saham. But not all of the achievements are about numbers. In promoting transparency and better corporate governance, we also decided to publicly list in July 2011 through our holding company named Malacca Trust in Singapore. It's quite common knowledge how companies going through public listing process will be scrutinized throughout the entire process, and especially in a country like Singapore being a prominent international financial center. But we were pretty committed and firm about the decision because we wanted to make sure that our counterparties feel more comfortable doing more business with us by showing them that we are promoting the best corporate governance possible.
And how would you define your investment strategy with regard to your asset allocation?
The asset allocation strategy begins with the macro analysis, and this stage is very fundamental in our overall investment decision. Key market drivers such as the growth of GDP, monetary policy, fiscal policy, interest rate, and things like this are factors that we consider in determining our asset allocation. We use various sources for our macroeconomic outlook, both in-house as well as third-party research. And based on the analysis, we determine the asset allocation for all of our funds. We do have investment committee, where basically investment committee is responsible for approving all the asset allocation for all of our portfolio.
Compliance is clearly an important factor. What is your approach to risk and asset liability management?
We conduct investment committee meeting on a monthly basis, where basically we determine the relevant limits for asset allocation, sector allocation, stock or bond universe for all of our portfolio. Our risk management and compliance unit monitors all these relevant limits that's been set for every portfolio on a daily basis. And upon any breach of any investment guideline or any investment limit, then the risk management department will actually issue a report. And this report is distributed to the fund managers and the members of the investment committee for their reference, for their explanation, further rectification whenever it's necessary and relevant. And that's routinely done on a daily basis. But in a major changing market environment, the head of investment will call for a special investment committee meeting where basically the strategy and allocation for our various portfolio will then be adjusted in accordance to the decision made by the investment committee then.
Indonesia's economy is growing, certainly, but is the economy at risk of overheating?
The economy is definitely growing. It's often said now Indonesia is one of the main destinations for investments in Asia, and everybody wants to get a piece of Indonesia. The country has more than 245 million people in population, and they're very young, yet having increasing purchasing power. But we don't see the risk of overheating in Indonesia. For example, like the high inflation, which is a classic sign of overheating economy is not found in Indonesia. Our inflation in 2011 is at 3.8. Our year-on-year is 4.5, and our year-to-date inflation is around 1.5%. And those figures are relatively low in comparison to the annual average inflation of around 8 to 9% for Indonesia for the period of 2000 to 2010. Interest rate, yes, it's been going down in line with the inflation, of course, but our real interest rate is still positive. And our GDP number, our GDP growth for the past few years has been mostly more than 6%. But again, this 6% itself is not an overheating number for Indonesia.
Good indicators for the economy then. So what are Batavia's commercial goals and aims for the future?
That we keep climbing to the top, beating out the giants. And in attempt to do that, we will continue focusing on product innovation, provide steady growth in our clients' portfolio through, of course, our local knowledge in line with the international best practices, expand our distribution network, but most importantly, maintain quality human resources, which is our biggest asset. And when it comes to quality human resources, it's not only maintaining one within our firm. We also believe that we need to develop good talent pool in a bigger extent, which in this case is our clients as well as our distribution partners. Towards the end of the year, we are planning to launch Batavia Academy. And Batavia Academy is actually an informal education platform that we built internally to facilitate thousands of relationship managers and client service officers from our various distribution partners, where basically they can go to the academy and they get informal education with regards to the investment regulation, investment process, or any other relevant investment subject, where basically they can learn more about the industry, they can get the better exposure. Because we believe better educated sales force will not only generate potentially more quality investors, i.e. more quality investment, but also overall we can significantly reduce the risk of mis-selling within the industry. So hopefully we can launch that towards the end of the year.
Lilis Setiadi, thank you.
Thank you very much.